Hey all, good morning and welcome to ShareTreck. This is Raj here. Friends, I didn't make too many videos yesterday because I was mesmerized looking at the market, the way the crash happened. It made me recall a movie which had Richard Gere in it. It was called Margin Call. So I suspect that there could have been margin call triggered, and in my mind I'm playing out this scenario where there is this guy in a nice expensive suit and everything. He's got a lot of investments in the market. He wants to do Christmas shopping and he thinks, okay, let me start selling some of my stocks and go ahead and start my Christmas season. So he does that. And of course, there are many people like him who are trying to do that because it's already the 19th and they are late to buy gifts and all that. So the frenzy starts, and there are other group of people who want to book profits to show performance for the year for their clients. So they also sell. And what happens is that there are some people who are more risky than retail investors. I mean, retail investors are risky because they don't know what they are doing in many cases. Not you guys, of course, you guys are the smart ones. But there are a lot of retail investors who blindly invest, not knowing what's going to happen in the future. They ask somebody and put the money in it. But there are those sophisticated investors who borrow money and buy stocks. And when they buy stocks, they're not buying actual stocks, they're also buying options. So it's leverage on leverage. So those people, when they make money, they make big money. And when they lose money, they lose big time. And those are the kind of people who are always looking very closely to all small signals and everything. And I bet some of those people might have had margin calls triggered because of this. And that would have meant forcibly liquidating stocks at a lower rate to pay back the debt. And if that kind of a thing had happened, then today we should not expect an immediate jump upwards, because there will be others with margin calls who are holding on and who are trying to take money out and not lose so much. And those people will start selling. So there could be a downward cascade before we start upwards. And how soon it would be, I do not know. Given the fact that the interest rates are so high, I think the margin call activity will be much less. But a lot of equity from across the world has come into the stock market in the US. So I don't know how they are going to behave. And there's another factor that you have to keep in mind. As the US dollar becomes stronger and stronger, for the investors within US, it becomes important for them to diversify their risk, and emerging markets become more attractive because the companies that were very expensive earlier are now cheaper because the US dollar is stronger and the foreign currency is weaker. So money can move across for geopolitical diversification and geographical diversification and so on and so forth. So we should keep all these factors in mind. I'm not saying that the crash is going to persist, but any movement downwards is not a straight movement. There'll be a little bit up and then come down and then up and then come down and then go upwards. The common wisdom that I see across all sources of information is that the second half of the year is going to be bad. And the Fed was not very reassuring that they have an idea of what's happening going forward. They are looking at both employment as well as inflation. They are afraid that the inflation might go up. Earlier they were afraid that the employment might go down. So now they are saying they are looking at both, which means earlier they were afraid only about employment going down. Now they are afraid of not only employment going down, but they want to maintain it, but also they are looking at inflation as a risk. So this is not very reassuring. So with that, if you look at the background of highly extended markets, what happened yesterday seems very logical. But is it going to continue falling down? I think it will go a little bit up and then come down again. And how long will it go down? I have no idea. We'll see emerging information. We can only react to this. We cannot predict, because technical analysis and fundamental analysis is not worth the paper it's written on, even though technically it could be right, because various investors in the market have various forces driving their buy and sell decisions, and they may come to different conclusions. Not everybody is using technical and fundamental analysis. There is a whole lot of emotions and sentiments and information involved in making those trades across the market. So that said, let's get started and see what today looks like. Welcome back. right off the bat, we can see that all the three index futures are looking positive. In the past also, they had looked positive like this and had a green day. And there were times when they looked positive like this, and somewhere around 9 o'clock or somewhere around 10 o'clock or 10:30, they start going down. What's going to happen today? I don't have a clue until we see the Tradingview platform, look at the price charts. Maybe there is some clue hidden out there. We'll look at that. Now, the Fed rate cut was executed as expected, 25 basis point. But going forward, the kind of confidence that the market had on the Fed being on top of everything, I think it has eroded a little bit. So that's what I would like to say. And there is another data point coming up today at around 8:30 a.m. It is the GDP growth rate final. And this number will also give us some amount of indication of the health of the economy, and that could help firm up the stock. And then tomorrow we are going to have core PCE index and personal spending. That information can give more information about the consumer sentiment. So together those two things can help salvage the market or maybe push it down further. So we don't know how the readings are going to come out. Now I'm going to go into futures for NASDAQ, and you can see that we are bouncing off the support on the lower side of this wedge. So the wedge support has functioned, and today we are up 0.28%, which is a small green candle that you see here. But if you look at momentum, it's just at around average. So momentum has dropped, and MACD has already become bearish. It has crossed the signal line. So the question is whether there is enough juice in the tank for NASDAQ index to continue to bounce upwards. But if it did break down below this diagonal line of support, then I think we have got another support which will happen immediately, and that's going to be at around 21,255. And if we break through that support, then we have this diagonal line of support and this horizontal support, which happens to be at 21,006. So that's what I'm looking forward to. And then let us go and have a look at all the indicators. So Dow Jones, you can see it had a huge drop yesterday, and this drop has fallen below all the levels of support. So I'm going to mark this red, and I'm going to mark this also red. So there are two resistances that have formed overnight, and we have a very bearish MACD, and momentum has gone to oversold area. So there's going to be a bouncing back. It could be a dead cat bounce in my opinion, but I cannot guarantee that my opinions are always right. So please use your own discretion. This is my personal opinion, not financial advice. If you look at QQQ still has got support, and there is a support somewhere around $513. And today the markets are up 0.47%. So I would say that for today, 513.57 seems to be a kind of support that we can expect for QQQ. And if you look at VIX, the VIX has jumped above 20, and this morning it has dropped 23.94% and it's up to 21. So I don't think we can take the market lightly. We have to watch the market carefully, because VIX at these levels indicates that caution is advised. And let me take you to some of the select stocks in AI and genomics. I'm going to start with AI first because that's where most action is. The only stock I want to talk about here is NVIDIA. I think that there could be some opportunities in NVIDIA. We have converted a support here into resistance, and that resistance happens to be 130.15. We are right now at 128.91, and pre-market we are at 131.41. So the chances of converting this into a support is pretty high. And I think that there's a lot of good news recently for NVIDIA. And NVIDIA is way cheaper in terms of multiples as compared to the likes of Tesla and Palantir. And they have consistently delivered extraordinary results, and they are pioneering the industry. So I think I would personally look forward to see if I can buy any NVIDIA. Of course, it depends on what the current, that's the only stock I wanted to talk about in case of AI. The next stock I want to talk about is in genomics. It is CRISPR Therapeutics. As you can see here, from the 2nd of December to yesterday, CRISPR Therapeutics has lost around 26.28% in value. That's a significant drop, and we are very close to the all-time low for this year and for the previous year. So in the previous year, we had gone all the way down to 38.28. Maybe even below that, actually 37.85. So we are very close to there, and the MACD is looking absolutely bearish, and momentum is down. RSI is very close to oversold, but it's not yet there, because in the past CRISPR Therapeutics had gone all the way to 26.25 on the RSI. I think there is still more that CRISPR can lose. It all depends on the overall market sentiment. So there could be an opportunity to re-enter CRISPR, because we should remember they have monetized products, and they would, regardless of whatever happens to the economy, health, food and shelter, these are three things which are definitely going to have continued demand. So I think CRISPR Therapeutics would be kind of a defensive move if you wanted to invest within genomics. This is my personal opinion, of course, not financial advice. I'm going to be looking closely at CRISPR Therapeutics, and if it gets into the high 30s range, then I would definitely be tempted to buy some. I'll keep you informed what I do in that regard. The other stock I want to talk about is Grail. This is a great opportunity for anyone who wants to enter into Grail to get back in. And I'm going to think about this today, and maybe I'll make the move. Right now, pre-market Grail is up 3.70% at 18.76. So I'm not going to buy right off the bat, but I'm going to wait until 10:30 and see what happens. If I miss the opportunity, so be it. But if it comes down after 10:30, then I would like to buy it somewhere below this diagonal line of support, because I want to see if it can bounce back. If it bounces back, then maybe I'll buy it. But if it goes down below this, then I think I'll start the dollar cost averaging process, and I'll buy a small amount and wait for it to fall down further. So that's my plan. Again, I would like to hear from you guys if you're looking at Grail, and what is your plan. Another stock that I think I would be very interested in is Illumina. Illumina fundamentally is a sound company now. Most of the defects have been removed from Illumina. They have a good market leadership, and they are continuing to push the envelope. So I am thinking that with AI coming in, Illumina would be a company that can deploy AI very effectively, and that should give them a bit of an edge in improving their productivity and in improving their margins. So I'm hoping that Illumina would be one of the best stocks in the genomics sector. So I'm going to keep track of this. Right now the MACD is very bearish and momentum has dropped significantly, but pre-market we are up 0.76%. So if I was to compare between CRISPR, Grail and Illumina, I think Grail seems very attractive because there is a lot of promise for exponential growth. And with regard to Illumina, I think that capital preservation is guaranteed. And some growth will also be there. With regard to CRISPR Therapeutics, I think that growth may be there, and capital preservation is not guaranteed because it could fall down further before picking up. So for short term, I think CRISPR is not something that I would look at. I would look at more of Illumina. And if you have a longer time horizon, I think CRISPR looks good to dollar cost average as it falls down, maybe in the high 30s. So that's what I'm thinking. I'd like to hear your opinions on what you think is ideal. The next one is Unicure, which has got good prospects going for itself, but it's available at a slight discount. But remember, there's a huge gap up that still needs to be filled up. And if the overall market sentiments go weak, you may see Unicure attempting to fill up this gap. So it's quite risky. So that's all I have for you, my friends. I need to recover lost time. I have to make videos on Editas, Intelia, a few more companies in our genomic watch list for the year-end review. So today I'm not going to be mesmerized by the index. I'm going to focus on doing those things, creating those videos and releasing it out to you guys. And I look forward to your comments and feedback, because this is exactly the time when we have to pull all our thoughts together and try to make sense out of it. And one of you may have the key on how to trade during this kind of a market situation and make out some profits. So I'd like to hear from you. Please do not hesitate to share your thoughts. I'm doing this on the video, so you should be able to do it on the comment section. Looking forward to hearing from you. Guys, see you later. Be safe in the market. I'll see you with the next video, probably later today. Bye for now.